should be happening against the Fed right now?
Oh, obviously, as with most people who have been following the independent central bank for years, I do not think these attacks should be happening. You just played a piece from my friend Austin Goolsbee, the president of the Chicago Fed. I agree with him wholeheartedly. It is unwise to call into question the independence of the Federal Reserve System, as it is to call into question the independence of any central bank. We've learned that credibility at the central bank is critical to exercising monetary policy and to creating, trust and confidence in the U.S. economy.
Roger, we've attributed much of what's been happening with the volatility in the markets to tariff policy, other perceived policies coming from the White House, perhaps down the line. From the Federal Reserve standpoint, I wonder how much you think things could change if these attacks on central bank independence continue. Just how bad could the market volatility get?
Well, I think it could continue quite dramatically. We've already seen, international investors call into question, perhaps, the stability and reserve currency nature of the dollar. It is unusual to have equity markets down and the dollar go down as well. Normally, when equity markets are down, individuals look for dollars in order to buy the fixed income, the riskless asset that the U.S. offers in terms of our treasuries. There's been less of that of late, and I think that kind of thing could get even worse. There are more and more newspaper articles starting to talk about, the weakness of the dollar as a sign that maybe its reserve currency status, while probably unchallenged, maybe has been questioned a little bit, and that has never occurred. So I think this is moving us in the wrong direction vis-a-vis international investors and people who believe the dollar as a reserve currency of the U.S.
Roger, this is coming from a place where I don't believe, and I don't think many people do, that there's any real threat imminently to the value of the U.S. dollar in terms of its reserve currency status, in terms of its safe haven status. But longer term, what exactly does it mean? Do you feel as though this could have a real market effect on the attractiveness of U.S. assets if this policy type, regime continues against not just the Fed, but perhaps on the trade front as well?
Well, look, I agree with you that it seems highly unlikely, I'd say remote, that the dollar would lose its reserve currency status. For one thing, there's not a currency there that seems likely to replace it. On the other hand, the fact that we're even talking about it is a dramatic shift in regime. Normally it's not even something to be questioned. It's not the kind of thing that you read about in serious, papers or in serious TV shows such as this one. So it certainly is weakening the perspective that the dollar is, going to be insurmountable for years and years to come. So I agree with you. Seems highly unlikely. There's not an alternative on the horizon, but it's inappropriate or unfortunate to even, have a series of policies that are allowing serious people such as yourself to call into question whether or not the reserve currency status will remain.
Roger, before we let you go, I've got one question that I've heard a lot of folks, at least the ones I've talked to, ask, at least talk about or debate. Why is the Fed, why is Chair Jay Powell, why are they not able or willing to cut interest rates the way that President Trump wants them to be cut?
Because they've got a mandate that says they should focus on, stable prices, low interest rates and low inflation. And the issue, obviously, is that inflation expectations by some measures have been rising. The last several measures that we've had of actual inflation have not all been consistent with the notion of moving towards a 2%, inflation target. And you hear everyone saying that the tariff discussion is both raising the prospects of future inflation while also the prospects of slowing the economy. So I think the Fed's stuck in a difficult situation where they're talking about stagflation. And in that environment, I think, first, they should focus on getting inflation under control. And secondly, they certainly should not be cutting rates, which, if anything, will add fuel to the inflationary fire. So, their mandate, I think, precludes them from cutting rates at this stage. And depending on how things play out, calling for them to hold rates stable or possibly even increasing rates if they see a rise in inflation or inflation expectations that's taking all of us away from the desired 2% inflation target.
All right. Former Fed Vice Chairman Roger Ferguson, thank you very much. We appreciate it, sir.
Thank you.
All right, we'll hear much more on that growing fight around Fed Chair Jay Powell's future when Chicago Fed President Austin Goolsbee joins CNBC at 8:30 a.m. Eastern Time. You can see that interview right here on CNBC or on CNBC+. Turning back to this morning's breaking news, Pope Francis has died at 88 years old. The Vatican announcing the news earlier this morning. NBC's Claudia Lavagna joins us now from the Vatican with the latest there. Good morning, Claudio.
Hey, Dom, good morning. Well, as you can see, there's a lot of commotion here in St. Peter's Square, like right after the news came out at 7:45 this morning. It's about 1:45 Eastern Time. All the media from around the world has arrived here, and they're trying to move us around to make sure that we don't disturb the pilgrims who also are arriving in flocks to pay their respects to Pope Francis. Also, this is a time where St. Peter's Square behind me is very busy anyway, because not only is Holy Week, it's Easter Monday, also it is Jubilee year, so a lot of pilgrims were meant to come here anyway, and a lot of them, when they saw the cameras, they came to ask us, what were you doing? Why are you here? And we told them, we broke the news that the Pope has died, and they were in shock, and they started praying for him, they started gathering in prayer. So this is very much a moving situation, and certainly it comes at a very, very special time for the Catholic Church. As you know, the Holy Week is the holiest and most important week in the Catholic calendar. And the last time we saw Pope Francis was literally 24 hours ago. I was here in St. Peter's Square to watch the Easter celebrations, and everybody cheered when they saw him appear, make this surprise appearance on the balcony, the central balcony of St. Peter's Basilica right behind me. He looked frail, as he has looked for the past few months, but certainly it looked like he was, recovering well, because he was, for instance, not wearing those nasal cannulas that he's been using lately to receive that intake of oxygen to help him breathe. He was not wearing those anymore, and we took it as a good sign. Also, he managed to speak, he just spoke a few words to wish everyone a happy Easter, and then he even got on the Pope Mobile to tour St. Peter's Square to greet everyone for the first time since he's left hospital more than a month ago. So all those signs we took as signs that he was recovering well, but clearly that was not the case, because literally 24 hours, well, less than 24 hours later, he was pronounced dead this morning. Dom?
Claudio, just one quick follow-up here. What comes next now? What do the coming days and weeks look like for the Vatican?
Well, first of all, Dom, the Pope is going to lay in state in St. Peter's Square in the next couple of days, and we do expect, enormous, massive lines of queues of pilgrims wanting to pay their last respect here in St. Peter's Square. Then between 2 and 4 days from now, we're going to see a funeral that will be held again in St. Peter's Square. And then in 15 to 20 days from now, after the funeral, we're going to have 9 days of what is called the Novem Dialis. That is 9 days of mourning for Pope Francis, with a lot of masses of remembrance of the Pope. And then between 15 to 20 days from today, we're going to have, of course, a conclave where the cardinals will elect the next pontiff. Dom?
All right. Claudia Lavagna at the Vatican with the latest there. Thank you very much for that. Coming up on the show here, the next big test for the markets as investors prepare for a wave of technology earnings, including 2 of the Magnificent 7 stocks. We tee up what to expect from the once high-flying sector. That's coming up next.
Kelly Evans, The Exchange, CNBC.
CNBC is on assignment in Barcelona as Spain once again plays host to the Mobile World Congress.
We have all this kind of wildfires everywhere. There is the need for data centers. There is the need for more computation power. There is this need for AI. There is the need for connecting the world to bring businesses together. There is the need for consumers to have faster access. And for all of this, we are kind of firefighters trying to solve that problem, but we have a leaking hose here in Europe because the regulatory environment is not fitting.
I think it has created a different thinking. The momentum's still there. large language model continue to be prevalent.
AI is such a compelling technology. Every country in the world is going to pursue it. I think it's an imperative that the Western world lead in innovating in this new technology. That means investing in compute so we have the best infrastructure. It means investing in data so that the models can be trained in innovative ways.
I think ambition is all about hard work, determination. I put in 7 years in investment banking to really build a foundation. When I'm in the anchor seat, I try to think, what would my former clients want to know? That's what motivates me.
All right, shares of Netflix right now are poised to pop at the opening bell today. The streaming service reporting better than expected first quarter results and guidance after the close on Thursday. On the call, management say that they're paying attention to consumer sentiment and the economy, but have not noticed any significant impact just yet.
We haven't seen any significant changes in plan mix or plan take rate to part of that question. Our most recent price changes have been in line with expectations. Engagement remains strong and healthy. So things generally look stable from that lens. Stepping back, we also take some comfort in the fact that entertainment historically has been pretty resilient in tougher economic times. Netflix specifically also has been generally quite resilient, and we haven't seen any major impacts during those tougher times.
All right, Netflix is the first of the big tech and media companies to report this season. We're going to hear from Alphabet, IBM, and Intel later on this week. So joining me now to break this all down is Melissa Otto, the head of research at S&P Global Visible Alpha. Melissa, the Netflix story is interesting, but it's one that's not a secret. This is a stock that's already up 9% this year and 75% over the past 12 months. So how much can we glean from Netflix vis-a-vis the rest of the big tech and media companies to report?
Morning, Dom. It's great to be here. I think the big thing with the Netflix earnings is around the margins. Revenues came in line with Visible Alpha consensus. There was no big surprise there for Q1 or for the guidance they gave for Q2, but the margins were significantly higher for both. Margins came in at over 31% for Q1. They were expected to be 28.5%. Similarly for Q2 guidance, they came in around 33%. They were expected to be closer to 30%. So you're talking about 300 basis points of margin expansion that exceeded, or 300 basis points that exceeded expectations. This is quite noteworthy. I think going into the second half, the company did note that expenses are kind of heavier in the second half, and that we may see that margin expansion calm down. But I think in terms of the full year guidance that they gave for their margins around 29%, that could be a bit conservative.
Okay, so also one of the things that stood out was this notion that their focus is going to be a little bit more, I guess, in tune with certain growth aspects of their market. What exactly did you hear commentary-wise that resonated with you with regard to what they think is going to be the business plan going forward?
The trends are very stable for them, and the ad-supported businesses gaining momentum. So I think, you're seeing this dynamic in their business model that is changing. Based on Visible Alpha consensus looking out to 2030, the market is expecting $11.9 billion in revenue from the ad-supported business. That's very significant growth from where it is today. So it tells me that they are looking at other ways of monetizing their content as well as driving engagement.
All right, Melissa Otto with the latest on Netflix there. Melissa Otto at S&P Global Visible Alpha. Thank you very much. We'll see you soon. Still ahead on the show, the one word every investor needs to hear today and the stock pick that every investor needs to know as well. Plus, making a comeback. Pippa Stevens lays out the modern demands that have led to a real resurgence, a renaissance for coal and powering American energy. That story when we come back after this.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
CNBC meets David Beckham.
For a long time, people wanted me to do the life documentary, but I'm not very good at opening up. The things that I've been through in the past, I've kind of put in a box, locked it up, and thought I'm never going to have to talk about it again. And I was happy with that. But I didn't realize how important it was for me to actually talk about this stuff. So I opened up and talked about things that I'd never spoke about before, like, injuries and worries and things that went on throughout my career, the sending off and how that made me feel.
When you talk about the sending off and the reaction to it, when you look back, what kind of mental resilience?
Well, I'm really glad social media wasn't around back then because it was bad enough then. It was challenging, and when I look back at some of the footage, some of the archive stuff I'd never seen before, and it was hard to watch, and I get emotional talking about it.
Welcome back. Fair value right now for the S&P 500, Dow Jones, and NASDAQ imply an open of roughly a 1% decline for each of the three major indices. So we'll keep an eye on whether or not we see that momentum downside-wise continue into the opening bell. Meanwhile, President Trump is looking to revive the struggling coal industry, but there's another reason why coal power plants are suddenly very much in high demand. Our Pippa Stevens joins us now with more on that coal renaissance. Pippa.
Good morning, Dom. Well, there is a key reason why coal assets are valuable, and it's not the coal itself. It's that these plants are already connected to the electric grid. So at a high level, if you're a new power plant or a data center and you want to connect to the grid, you have to wait in a long line known as the interconnection queue, which in some parts of the country is now more than 5 years long. But a currently operating or recently retired coal site already has the hookup to the grid, including the wires and substation and the rights to use it, which means repurposing an old coal plant can become a shortcut of sorts with a much faster timeline for powering up. And so what we're seeing is coal sites repurposed for renewable energy like solar and storage, as well as for new data centers. Across the U.S., there are 382 retired coal plants with about 120 that have a high potential to be data center location sites. That's according to Accenture. Amazon and Google are among the hyperscalers that have targeted retired coal plants. And this is important because in the AI arms race, the time it takes to secure power is critical and a big bottleneck. So pursuing creative alternatives like looking at retired coal plants can be a strategic way forward, Dom.
So, Pippa, what about the president's broader goal of reviving the coal industry overall? Does it have legs past just, say, the next 1 to 4 years?
So it's very unlikely that we'll see any type of resurgence in coal power itself. It's been declining for years. Right now, coal is about 16% of our power grid, down from more than 50% at the turn of the century. And that's simply because the economics don't make sense. It's so much more expensive than alternatives like nat gas or solar plus storage. And so while we could see some life extensions of current plants and then also these plants being repurposed, we're not going to see any type of resurgence in the coal industry overall, Dom.
All right, Pippa Stevens with the latest on that coal trade. Thank you very much for that. Coming up on the show here, the sector our next guest says investors can bank on when it comes to finding opportunity. That sector seeing some momentum as of late. We'll reveal that coming up next. We'll be back after this.
There's a difference between ambition and greed. Greed is wanting more. Ambition is wanting better, and not just better for yourself, for your family, for your community, for your country. There's no reason to want CNBC if you're not ambitious, right? If you don't want better insights, better returns. And that's not just financial, though money is a part of it. We're talking about value.
Home to the world's biggest population and a fast-growing economy. Is the EV story resonating amongst Indian consumers? CNBC goes inside India to give you insights into the opportunities and challenges shaping the emerging powerhouse. Narendra Modi seeks a historic third term.
Several indicators they cannot afford to look the other way.
It's all part of the normal flow of market forces.
The stories, people and businesses behind its rise. This is your gateway to India.
What inventions have transformed humanity?
The wheel, the light bulb, the internet, and me.
Learn how to use AI to be more successful with CNBC Make It's new online course.
It's about how we embrace the technology.
What we're really talking about is automation of tasks.
You're going to feel like they were just always part of your life.
We'll give you examples and how you can use AI tools at work and in life.
Register at cnbcmakeit.com/AI.
The age of AI is now.
The ultimate pre-market morning news show. Squawk Box, CNBC.
All right, welcome back. Let's tee up the trading day ahead and bring in Catherine Rooney-Vera, Chief Market Strategist and Chief Economist at StoneX. Catherine, the trade right now has become very, I guess, maybe ripe with opportunities in certain parts. Which opportunities do you think are the ones that people should be focusing on the most?
Well, I think there's babies that go out with the bathwater when you have a market meltdown like we've seen in the past couple of weeks. And the two sectors that I primarily like, especially when we look at granularly within the sectors, are financials and biotech. I think innovation is the way to go, especially when you're looking out on a 1 to 5 year horizon. And when you see a yield curve steepening, I think banks are in a good position to benefit from an eventual rebound in the economic activity data.
Catherine, how long does that potential rebound maybe take, given the idea that many of these big banks and even some pharmaceutical companies have cited tariffs as a possible reason there could be headwinds in the coming months and quarters?
Well, the sectors that are most offensive are probably going to be the ones that continue to outperform. My top picks coming into this year are utilities, healthcare, and staples. But I think these are the two sectors that are more cyclical that could likely withstand the headwinds and see nice upside once we get through this uncertainty. Of course, we have the 90-day freeze, but I think the next thing that's going to come into the pipeline, Dom, is soft data moving into the hard data. So we should and will expect a slowdown in economic activity, but not something that the U.S. cannot weather. So I do think that we can see opportunities in these two, primarily these two sectors, biotech and banks.
And Catherine, that brings us to your word of the day. What exactly is it, and why do you think that word is relevant now to investors?
Well, we've all been talking about and discussing the risk of recession. Every one of us, market analysts, puts a probability weighting on it. But I think we haven't seen the hard data come now. So the word is inflection. And what we've seen is soft data, 4 months of consecutive consumer confidence declines, PMIs, survey data, Fed regional banks coming out negative. And now the hard data is going to start rolling in. We see capital goods coming this week. We have durable goods coming this week. The housing market is reporting. So I think what we need to be looking at is the internalization of the markets that we are potentially going into, at least some sort of short-term either contraction or dramatic weakening in the U.S. economy.
Catherine, there's also, inflection also has an interesting kind of, construct around the current environment. I mentioned before that investor sentiment has soured dramatically so over the course of the last several weeks and maybe months now. Is that an inflection point maybe for the markets? They are leading, right? And oftentimes when there's this kind of bearish sentiment, it often signals a possible bottom. What are your thoughts there?
Well, absolutely. And when you look internationally, there's a lot of bearish sentiment going back to the legs that we saw at GFC and COVID. So there's a lot of negative sentiment baked in. The only advice I would add is that it seems that a lot of investors are potentially looking through the hard data, which is going to come rolling in. So a word of caution, but yes, historically, when you do see this level of bearishness, it does come to an inflection point. But timing the market, Dom, as you know, is impossible. So we look for cues to see when is the time to start to accumulate.
All right. Catherine Rooney-Vera with the latest on the markets there. Thank you very much. We appreciate it right now. Let's give you a check right now on the futures because we're going to start off the week with what looked like declines. The Dow Jones implied lower by about 350 points, the S&P by about 55, and the NASDAQ down by 200. A quick check on Netflix, which is going to buck the trend. This is the first chance investors will get to respond to their earnings report, which came out after the closing bell on Thursday. Right now, those shares are up about 3% right now. And as I point out, again, a huge move to the upside, 75% over the course of the last year. And on the Treasury side of things, the 10-year note yield, the benchmark side of things, ticking higher to 4.36%. Meanwhile, the 2-year note yield is hovering right around 3.75% as well. So as we talk a little bit more about the Treasuries and the markets here, remember, we're going to open just a bit lower. We'll keep an eye on that. In the meantime, Squawk Box picks up the market coverage right now.
Good morning. We're at it again this morning. Futures pointing to losses for the major averages coming off the third negative week out of the last 4. Meanwhile, China is vowing to retaliate against countries that team up with the U.S. to isolate Beijing. The latest tariff headlines just ahead. And the White House reportedly planning to pull more money from Harvard as the fight between the White House and Harvard escalates. It's Monday, April 21st, 2025, and Squawk Box begins right now.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernan and Andrew Ross Sorkin. And as Joe mentioned, we are under some pressure this morning. When you take a look at the U.S. equity futures, market was closed for 3 days. I guess it's making up for some lost ground at this point. Dow futures off by just over 340 points. The S&P futures are down by 53. The NASDAQ down by close to 200 points. Again, this is after you saw the third negative week out of the last 4 for the equity markets. Take a look at what's been happening with Treasury markets after Jerome Powell's comments from last week, followed up by what we heard from President Trump. After that, you're going to see that the 10-year is now yielding 4.36. The 2-year is at 4.70 or at 3.74, and gold was at an all-time high on Friday as well.
Big today too.
Yeah,
big.
Gold is up big.
$80, I think.
Let's take a look at this. It's an all-time high. Now it's up 2.3% to $3,405 an ounce. The dollar is on a 4-week losing streak that we've been watching, again, pretty closely over what's been happening with that. There are some questions about whether the Treasury Secretary would like to see a weaker dollar and lower rates. But the dollar this morning off by another 1.25%. For the year to date, it's down by 7.5%, and those numbers do start to add up. In the meantime, the Vatican announcing that Pope Francis has died at the age of 88. Francis was Pope for about 12 years. He was the first Latin American pontiff. He stressed humility, and he made concern for the poor a recurring theme of his papacy. He was also the first Jesuit who was in this position, and a lot of his positions reflected the Jesuits' overall broad views on things. He did alienate conservatives with some of the critiques that came of capitalism and climate change.
First non-European Pope.
Since the 8th century.
1,200 years.
Since the 8th century. Yesterday, Easter Sunday, the Pope was visible. Got to see him there blessing thousands of people in St. Peter's Square in Vatican City. He made a surprise drive through the square in the Pope-mobile, and that had a lot of people hoping and thinking that he was in much better shape than we had been hearing recently. He did suffer from chronic lung disease and was admitted to the hospital in February for a respiratory crisis that developed into double pneumonia. The Pope also met with Vice President J.D. Vance yesterday. Tributes from world leaders have been flowing in this morning. Francis's successor will be chosen in a gathering of cardinals that's known as the conclave, and we've all seen a lot more about that recently, too.
It's like his last video was with the vice president.
Yeah.
At the end of 2019, I never told you guys, I went and visited with him.
Did you really?
And interviewed him.
Why did you not tell us?
Because it was a piece I was going to write for the New York Times Magazine, and then the pandemic happened. And so there was no time to, I never wrote the article. And I was waiting to write the article. And it was all about how all of these corporate leaders, CEOs, were actually going to visit with him. This actually goes back to ESG and capitalism and what was happening with the climate change and everything else. And all of these CEOs, I will keep their names out of it for now, but were going on these pilgrimage almost trips to visit with him and to talk with him about what they were planning to do as it relates to trying to have a more inclusive capitalistic society and what they thought should happen as it related to their companies.
And all of that is unwound since then?
Of course, now all of that is unwound. Obviously, I haven't spoken to him since then, but he was very, he was very encouraged by the idea that all of these businesses were doing it. And it was very interesting to see significant business leaders actually go to visit with the Pope to tell him this. And again, people always say, were people doing ESG as some kind of virtue signal thing or something else? And I always thought to myself, I always go back to the meeting that I went to, which also involved a whole other bunch of people as well. And then I spent time with him afterwards. But there were a lot of business leaders who actually, I think, genuinely did believe in ESG and in all of the work that they were doing as it related to this stuff because they wanted so desperately for his approval, in fact.
Were they Catholic business leaders who were going to meet with the Pope?
No. There were Jewish business leaders. There were Muslim business leaders. There were some Catholic business leaders. It was a cross section. But and by the way, from the oil and gas industry, from technology in Silicon Valley, from banking, all sorts of people.
This? Was there one person who led the whole big thing?
Who were doing this? No, and there were, people don't know this, there were lots of these kinds of meetings that were happening at that time. It wasn't just one trip. There were a significant number of leaders who were going to do this. And in fact, at one point, one of the pontiffs had gone to Davos, in fact, and actually met with a whole number of people about... What do you mean with the pontiffs? A previous one? I believe one of the earlier, I'm sorry, this pontiff had made had started to send statements, rather, I apologize, to Davos, and then they had sent some of their deputies to Davos to start to meet with business leaders. Nonetheless, it's actually just interesting to think about.
He issued an encyclical on climate change, and we'll see. Right. We'll see as the years go by whether the church and whether the Pope should have actually been weighing in on that. One of the criticisms of this Pope is that there were other things that were not totally dealt with.
From the sex scandals.
Yes, right. And he's working on
some of the issues in the open.
Working on what what a lot of people are still skeptical of. And an a papal, and he's very liberal from Argentina. I'm not going to say anything bad about him.
I mean, a lot of those issues, those scandals, have been inherited. This next Pope, whoever that is
he had a chance to, but there were just times where it was like, this is your priority at this point, when this is still, he's a Jesuit. I mean, I was Jesuit educated, but I can tell you that, I did come back to the church after being educated by the Jesuits. It took a while, but they almost got me to, they're so liberal. I mean, they're crazy, but it's okay.
Meantime, China warning that it plans to retaliate against countries that cooperate with the U.S. in ways that compromise Beijing's interests. A statement from the Chinese Ministry of Commerce cautioned about the risk to countries once international trade returns to what it called the law of the jungle. The White House reportedly planning to use tariff negotiations to pressure U.S. partners to limit their dealings with China. In a post on his social media network over the weekend, President Trump detailing a list of what he's calling, quote, non-tariff cheating, which included things like countries engaging in currency manipulation and value-added taxes. We've had conversations about what a value-added tax is and how that's much more of a local tax across the board rather than a tax against us. Trump also saying that many world leaders and business executives have approached him asking for tax relief. He posted, "It's good to see that the world knows we are serious because we are, exclamation point. They must right the wrongs of decades of abuse, but it won't be easy for them."
And the latest on Harvard, Wall Street Journal is reporting that the Trump administration is planning to pull an additional $1 billion from Harvard University's funding for health research. This is after last week's developments when the White House froze more than $2 billion of grants to Harvard after the school rejected demands which would have audited the viewpoints of the student body and some other actions. And prior to that, the Journal's report says that the Trump administration was planning to treat Harvard more leniently than Columbia, which saw $400 million in federal funding frozen over what the White House sees as insufficient combating of anti-Semitism on the campus. The report says Trump administration officials thought that the initial list of demands they sent Harvard a little more than a week ago was a confidential starting point for negotiations. Meanwhile, the New York Times has reported that the list was sent by mistake.
I don't know if you read that piece,
no,
which was fascinating. How the folks at Harvard actually got a call from the folks at the administration afterwards saying that the letter was a mistake, that it wasn't supposed to have been sent to them. They get it on a Friday. They think to themselves, well, this looks like an official letter, and it has all these demands in it. We have to respond to this letter. And so, of course, they call their lawyers, and all the things happen that we saw, and then, of course, the response from Harvard. And then they find out afterwards that at least the administration privately was telling them, we weren't actually planning to send you that letter. That letter was going to be distributed internally or something first before we figured it all out.
Before we
and now, of course, there's a doubling down, though, that's going on by the administration, not just to suggest it wasn't a mistake, but we're going to take it farther. We got a lot more coming up. It's a big morning. FundStrat's Tom Lee is going to join us live on the markets. The future's down pretty significantly, 337 points this morning. We'll see where it heads up, or where it lands today. Stay tuned. A lot more on Squawk Box in just a moment.
CNBC. Live ambitiously. Live from the New York Stock Exchange. Halftime report. CNBC.
Wow, that's exciting. People are not afraid to relax. Oh my God. So this is my family's go-to spot, and it's always so good. My name is Chad Kubanoff. I've been living in Ho Chi Minh City for close to a decade now. This really is like the steak and eggs in Vietnam. I love Vietnamese cuisine because it like crosses lines all the time. Like, is this a salad? Is this a noodle bowl? It's somewhere in between, and I think that's really exciting when you see dishes like that. I was reluctant to show you this spot because I love it so much, and I don't want it to get any busier. And it's so cool in Ho Chi Minh City because there's so many different styles of coffee shops, so no matter what you're into, there's something for you. If you want something that's a little more chilled, there's absolutely that. Or you want something that has a lot of koi fish, they have that as well. We can't be in Saigon without talking about Cơm Tam, or broken rice, which is like the dish of this city. After 10 years of living here, my palate has completely changed as a cook and as an eater. I love this kind of eating. This is what made me fall in love with Vietnam. Welcome to my neighborhood. Let me show you a few spots I love to go to in my downtime.
Wake up to Squawk Box Asia as we set the agenda for Asia's Business Day. I'm Martin Sung in Singapore.
And I'm Sherry Kang in Hong Kong, bringing you breaking news, in-depth analysis, and the stories behind the numbers.
Stay ahead with the insights that you need to succeed.
This is where business leaders and visionaries come together to shape the future.
Now live from Singapore
and Hong Kong.
Weekday mornings, CNBC.
Inside the world's most cutting-edge technologies.
We're seeing a real opportunity for those with brilliant ideas to accelerate towards change.
Discover the secrets and turn innovative ideas into profitable ventures.
Our vision is a world where human prosperity and economic growth are planet positive.
Embrace digital disruption.
I mean, this is life-changing technology.
CNBC Tech, The Edge, only on CNBC.
One Partnership is bringing technology and modern farming together to advance agriculture
and feed the nation.
We are starting with an automation platform. So a system which is controlling relevant machines, processes.
This is our prototype for the precision nutrient injector that interfaces with the Siemens platform that we're building. We're able to store over 100 different types of recipes. And on demand, the machine will actually mix it up and then deliver it to any go bids.
It is in the same moment giving remotely access to Artisan Green at any point of time. They can see what is the status, what is their energy consumption, what is their water consumption.
The Energy Manager module from Siemens allows us to monitor the equipment, and with that we're able to make sure that the equipment's running at its 100% efficacy, and as a result, electricity costs that way.
Sponsored by
All right, let's look at the futures this morning, down 340 points on the Dow, S&P down 52. I don't know if we've shown a chart of gold that up at another $80 or something this morning. Bitcoin up almost 3.5% as well. For more on this, I'm already talking to you and I haven't introduced you. Let's bring in Tom Lee, Head of Research at Fundstrat, Chief Investment Officer at Fundstrat Capital, as well as a CNBC contributor. And I don't remember whether it was you or Pump when we were talking about Bitcoin sort of stuck under 85,000 with gold going up every day. And it was either you or Pump that said Bitcoin usually follows a couple of months later but has a much bigger move.
That was probably Pump.
Yeah. He's pretty bullish.
Yes.
Have you noticed anything similar to that? I mean, that's a pretty big move. And, in the past, gold's been leaving in the past near term, 2 months, 3 months, whatever, this year maybe, we have seen gold leave Bitcoin in the dust and go to new highs. Looks like it'll do 4,000 easily, right? Do you think Bitcoin eventually catches some of the same money, the same bid?
Yeah, I think Bitcoin earlier this year may have been struggling with some of the deleveraging that was happening for institutional investors.
Just selling what they could.
Yeah, selling what they could, and I think that suppressed Bitcoin, especially over weekends. But now that deleveraging is done, I think that Bitcoin is going to catch up to gold, and Bitcoin's old high was over 110,000. So I think there is a lot of room to catch up as a sort of non-dollar asset.
As for the equity markets, you think stocks are attractive, but uncertainty is still the name of the game, and it's going to persist. Do you think the high in the VIX, what did you say that was on April 7th, that holds?
Yeah, I think it's going to be hard to match that level of fear again. So I think we're probably past peak uncertainty. I mean, even with this Fed controversy, but I don't know if we're past maximum pain. I think that there's still risk that the economic consequences are going to cause markets to be hesitant, but it's going to be hard to match that fear again. So I think a structural low did take place.
So I don't know if I really think it's going to be hard to match. I could get a lot more. People were pretty fearful. Yeah. So you don't think this is going to be the absolute washout that some people are thinking, something similar to past breaks that were really significant. So let me ask you this then, just specifically. Does the S&P have a closing bear market low from here? What are we down, 14% now, something like that?
Yeah, I mean, 4,800 was the low we made a couple weeks ago.
Yeah.
And I think that there's a chance we could be drifting dangerously close to that again the next couple of weeks, because there's still probably a lot of investors sitting on their hands and there's uncertainty. But on the flip side, I just think that we have to keep in mind that, one, companies are very resilient, and we'll learn about it during earnings season. But we could have a positive policy shock as well.
There is apparently...
What does that mean? Like a backing off of some of the tariffs?
Yes, we could have something that the market sees as a win. Whether it's going to be one of the 15 countries that we have a trade deal with, or a de-escalation with China, which of course overnight didn't seem like that was a possibility, but there is room for a positive policy shock.
Apparently there's still another place where they trade stocks. Is it? Have I got that right? The New York Stock Exchange? Are you ringing the bell there?
Yes, our company is ringing the bell this morning at 9:30.
At the New York Stock Exchange. We admit that we like them. But you're ringing because one of your ETFs has reached $1 billion, and it's called the Granny Shot
Yes.
ETF.
Granny
You
shots.
guys know what a granny shot?
Yeah, where you shoot from underneath
Yeah,
from the basket.
exactly. You can put more backspin, I guess, on that. And I
There
guess
was a pro who did
Rick
that very
Barry.
well.
Rick Barry,
yeah.
and they can get like 95%.
Yeah, NBA Hall of Famer, one of the best free throwers of all time.
Yes. So your granny shots are stocks that don't go down or impossible to go down?
Well, they do go down, but they're linked to the most important themes. So our idea is we identify like the most important themes that will last for 10 years, whether it's AI or cybersecurity or millennial structural things like that. But we find stocks that are strongest correlated to multiple themes. So it's a granny shot because you have more opportunities for that stock to work.
Great.
I like the name.
Yeah.
Thank you.
Yeah, I wasn't sure. Granny shots. I just saw granny. But all right, Tom. So when we did the mount, that's the close, right? So you have to be careful because that thing flew off once, and you're up above everyone, and it went down, almost hit someone on it. You don't have to do that though. You're just pressing a button.
Yeah, hopefully. Yeah, we don't want to injure anyone in the process.
No, you don't want to injure anyone in the process. See what it says right there on the screen, Tom? Dollar index continues to fall. I thought this was a weird chart here in the journal, and this is the number of bonds held by foreign entities, foreign ownership, and it looks horrible, but 2025 is at the very end. This right here, it's been dropping like a stone since it looks like the financial crisis, since about 2010, the ownership. Is this concerning now that China is going to sell all of our treasuries, or that we're losing our primacy as the leading economy on the globe?
Yeah, I mean, unfortunately, the tick data that would let you know that has a huge lag because last week was only the February data. So I know that as a market narrative has really taken root, but it seems like a lot more of the selling in treasuries has been in the U.S.
And so it's been hedge funds that had to unwind. Just based on
whether it's basis trade or just general de-risking. But of course, we don't want to risk like what could be a narrative to turn into a real de-dollarization kind of thing.
But you make a good point. The primacy of the United States, a lot of it is based on our companies. It's going to be tough for Europe to say, "Hey, come here, baby. We got all." What do they got?
Yeah,
they don't have any. They don't have any of the innovative, cutting edge. They don't have an NVIDIA over there.
That's right. I mean, that's the reality, right? Even if someone says, well, we have lower trade barriers, it doesn't suddenly make the best companies.
Right, because our economy sucks. I mean, right?
Yeah.
It's even worse than ours. So that's not going to cause us to become less attractive globally. Maybe it does. Maybe this administration eventually is able to, I don't know, to screw that up. But it's going to can what the Trump administration is doing now actually hurt our most successful companies? I think that's the question.
Yeah, I mean, I think that's what people fear, and I think they've carried that out and said it's definitely happening, but I think it's going to take a lot more than that to really destroy American innovation. That's why I think the U.S. gets through this, but there is, of course, a time element. We do have to lift this uncertainty.
And I just can't see China becoming David Tepper, I guess, thought China was a great place, but they're not going to replace us as the one country on the globe that attracts the most capital.
Yeah, I mean, they probably have the best shot at it, but yes, I mean, America has a lot more going for it than just great companies. It has great resources, and
do you think that Powell eventually has to lower rates?
Yes, and I think we might have seen peak Fed hawkishness last week.
Austin Goolsbee on today. He's kind of a
Austin did point out some concerning things yesterday. He talked about some of the issues where, we'll talk to him more about this later today, but some of the issues where, what we're seeing right now is going to cause some big results down the road.
There can be distortions.
If gold's moving on the dollar, on inflation fears, because inflation Maybe it comes back. I don't know, because the inflation numbers have been...
Trade war fears.
Right, trade war fears.
Here's my Fed question. Do you think they fire him? And if they don't, do you think that they announce some other person that they're going to nominate super early that is famously dovish?
I mean, I think the market consequences of firing are
who's famously
catastrophic.
It could be catastrophic.
No, but do you have anyone in mind?
I don't know who's. Well, the next question would be, if you're not going to fire him, but you wanted to play the sort of shadow Fed game, you would have to name somebody who's famously dovish.
Trump always brings up Warsh, right?
But Warsh is not famously dovish.
No, that's
She's
what I mean.
the opposite of famous.
So then I'm wondering if you have anyone in mind. You don't have anyone in mind.
Not at the moment. Maybe
Tom, just why you think it would be catastrophic for the markets? In what way? How would that play out?
Well, I think it compounds in investor fear, because I think the tariffs, the biggest shock, I think, to investor confidence is the idea that capitalism has like a covenant of stable regulation. And that got disrupted with these tariff rates that were really hard to understand. And then to now undermine the independence of the central bank, which is really the most powerful entity in the world, I think would really shatter confidence. So I think it could be very bad.
All right, Tom Lee, I think this should be a spot for you, permanent, like Monday, 6:10. I do, until you're so wrong that we just aren't listening to you anymore, if that ever happens, but that hasn't. I mean, you're on a tightrope all the time, and you're totally fearless.
That's right. We're a tightrope staring at a deep abyss.
And
we're
yesterday,
here for you until we're not.
On Easter, I saw a very religious quote from you, and I appreciate that. I feel the same way, but sometimes I think you better be praying. At times. Yeah, I hope
that's right.
I hope there is a God that listens to you.
There's a lot of uncertainty out there.
I know. All right, thank you.
All right, when we come back, Netflix shares popping after the long weekend. We'll get you up to speed on the streamer's first quarter results and why its guidance might not be quite as rosy as it seems. Stay tuned. You're watching Squawk Box, and this is CNBC.
Live from the New York Stock Exchange, Halftime Report, CNBC.
This is CNBC on assignment at L'Oréal's U.S. Research and Innovation Center.
Pledge is to invent the future of beauty, and therefore to do that you need the future of research centers, and that's exactly what's being built here, potentially the blueprint for our future R&D centers around the world. And it's going to serve the USA, our #1 market, but not only, because here will be invented new formulas that will serve consumers all around the world.
With a competitive beauty market constantly evolving, innovation is crucial to stay ahead. Consumers now seek products that cater to their unique skin tones, textures, and concerns rather than one-size-fits-all solutions.
Personalization is definitely the future of beauty. Real personalization is also what I would call the ideal curation, is giving you the most precise recommendation of existing products, but which combination will be perfectly matching your needs, your skin tone, or your hair type.
How much would you pay for luxury travel? A week's stay costs almost $270,000.
It's on the list for $30,000.
From secret getaways to one-of-a-kind deluxe experiences and bespoke services all the way.
The next evolution of the luxury traveler is experiences. Experiences really that money can't buy.
This is First Class, only on CNBC.
Before I go out, for me, the more relaxed I can be, the better. As soon as I try and create that situation where I'm tense, I'm like, okay, something big's about to happen, I need to do this. That's when I just don't perform to the level that I need to. And maybe that works differently for other people, and other people, you know, they go and have a kick with a football, or they go do some boxing and they get hyped up. You see their warm-ups, they're getting sweaty, and I'm just lying there having a little nap.
I can't believe that landed. What, you can have a nap before?
I'll have a nap. Yeah, it's like the lower my heart rate, the better I'm gonna do. Because when I get in the car, you know, as soon as the helmet goes on, you're in your own world. It's me, it's my car, everything's disappeared, and it's just, you have to focus on what's ahead of you. I'm still nervous, I'm still crazy nervous before races. I'm an overthinker, so I think of a lot of stuff. So the more I can almost calm myself down and just think, okay, all I got to focus on is the start. Then after the start, the rest will happen.
We're watching shares of Netflix this morning. The streamer reported first quarter earnings after the bell on Thursday before the markets were closed on Good Friday. And Netflix saying that revenue grew 13% during the first quarter and attributed the bump to better than forecast subscription and advertising dollars. This was the first time Netflix, though, did not disclose quarterly subscriber data. Netflix affirming its full year revenue and margin and operating margin guidance as well. But with a big beat on the operating margin in the first quarter and second quarter guidance well ahead of estimates, simply affirming its full year margin forecast could indicate some caution regarding the second half of 2025. At least that seems to be the read of some analysts, but nonetheless the stock up about a little over 3% right now.
Coming up, another new acting head of the IRS. NBC News told that the leader was replaced after Treasury Secretary Scott Bessent wasn't happy with some moves by sort of he was an Elon Musk, I guess an acolyte that was running the IRS. Elon Musk liked this guy. Scott Bessent does not know what that says about the inner workings of this administration. That story's next when Squawk Box returns.
For the fourth consecutive year, Interactive Brokers is one of the fastest growing prime brokers and is now number 5 in Preqin's ranking of top prime brokers. Interactive Brokers serves both organizations and individual investors. To get better results, get a better platform. The best informed investors choose Interactive Brokers.
It's a new science that could disrupt the medical industry.
The project is to understand the genetic makeup of Asians and to find out which of those genetic markers are ethical markers and not disease markers.
We're taking the bone marrow cells from the patient, making the edit, and we're putting it back into the patient, making a drug just for you.
I think that this technology is going to totally reshape how people have children.
The Edge dives into the world of genomics.
My side hustle brings in over 6 figures.
About $10,000 a month.
Over $500,000 since its beginning.
Find your hustle with CNBC Make It's new online course, How to Start a Side Hustle. 3 industry experts break down proven paths to success.
There's a tremendous amount of opportunity out there.
And help you choose the one that fits your life, schedule, and goals.
Find your own path to building multiple income streams.
Go to cnbcmakeit.com/side hustle to register now.
Good morning and welcome back to Squawk Box, live from the NASDAQ market site in Times Square. Let's just skip this part. Looking at the, no, we'll look at them. There they are. We're down 354 points on the Dow. The NASDAQ down about 216, and the S&P down 56 or so. We have gotten used to, we're getting inured to seeing like
big moves.
We don't, yeah. We don't even want to come in if it's not up or down like 500 points on the Dow, or 300 in this case. There is the 10-year moving up a little this morning, 435. Gold, another new high, big gain today. Let me see the jump, $78 up to 34.06. It just seems like it's almost, vertical there at the end.
40% move over the last year.
Yeah, and it really, I mean, you can't say it to the gold bugs, but it was waiting for Godot since 2011. It's like, okay, so you're doing good now. Enjoy. And then Bitcoin also doing pretty well. Just today hasn't been recently. You can see that's well off its best levels, which Tom Lee said 110. I don't remember 110. I remember 105, 105,000. The acting commissioner of the IRS being replaced after Treasury Secretary Scott Bessent approached President Trump to say the official had been placed into his role without Bessent's knowledge and at Elon Musk's discretion. That's according to a source who spoke with NBC News, who said that Bessent received President Trump's approval on the decision. The developments were first reported by the New York Times Treasury Department spokesperson confirming that Deputy Secretary Michael Falkender has been selected to become the next acting head of the IRS.
When we return, we've got the latest on the White House pushback against the Fed and Fed Chair Jay Powell. President Trump continuing to voice his displeasure with Powell. We'll talk about what this could mean for the markets. And a reminder, get the best of Squawk Box in our daily podcast. Just follow Squawk Pod on your favorite podcast app and you can listen anytime. We'll be right back.
CNBC. Live ambitiously.
I'm going to show you the way Vietnamese people enjoy a coffee in the morning. I live here and I have to say that I love the traffic here, which seems like chaos to foreigners, but it's actually an organized chaos. Everything works. Xin chào. Hello, my name is Khánh Vi. I'm a content creator and a TV host from Vietnam. Here we are at District 1, which is the central of Ho Chi Minh City. I think this is one of my favorite spots in the Independence Palace. This is the way of selfie for Gen Zs. 0.5. I'm originally from the north central province of Nghệ An, but I've stayed in Ho Chi Minh City for a couple of years now. Ho Chi Minh City has such great energy, and you can feel that when you come here. Winter Boulevard, and I'm so excited to bring you around our largest city in Vietnam. And here's what I do in my downtime.
On the next Converge, meet rising next generation leaders shaping tomorrow today.
Keep on learning. Never be satisfied with just today's outcome.
It is our responsibility to adapt. However, I think it is also important not to compromise on your values.
Whatever decision we make as a company, we always keep in our mind, what good can this do for our country as well?
Doing good for business and society are not mutually exclusive.
Find out how they're redefining leadership on the next Converge.
Kelly Evans, The Exchange, CNBC.
Welcome back to Squawk Box. Chicago Fed President Austin Goolsbee warning against limiting the central bank's independence. He said that yesterday following President Trump's criticism of Fed Chair Jay Powell. He's also been saying that Powell should lower interest rates, and we're going to talk to Austin Goolsbee directly. That's going to happen right here on Squawk Box in the 8 o'clock hour. Ahead of that, though, we want to bring in Krishna Guri. He is the Evercore ISI Vice Chairman, and maybe you can speak to the question that we were just talking about earlier with Tom here. Do you imagine that the president could fire this head of the Fed? Is that even conceivable to you?
So I think even at this moment, it's probably not likely, but it is clearly in the conceivable set. It's something that we have to take seriously, as a risk, and I think a serious risk to markets.
And if he does that, what do you think is the risk to markets? But then secondarily, what do you think of this sort of shadow idea? It's something that Scott Bessent had raised before President Trump was elected, this idea that you could nominate effectively somebody who was, in this case, I imagine you'd have to find somebody who's famously dovish and announce their nomination, months ahead of time, in which case that somehow the market sees through whatever this Fed chair is doing, with the expectation that the next Fed chair is going to be significantly different.
So let me take those in order, if I may. So first of all, I think we're already seeing, like right here and now, in the equity futures, in the dollar, in the bond yields, we're seeing a clear signal from the market that it doesn't like even the idea that the president might try to remove the Fed chair. There's been some loss of confidence in U.S. economic policy making in recent weeks. We've seen that in this very odd combination of upward pressure at times on longer-term bond yields combined with a weaker dollar. That suggests global investors pulling capital out of the U.S. But what you've seen is ongoing confidence in the Fed. You've seen ongoing confidence in the Fed, and that is crucial. You've seen those inflation expectations well behaved, well anchored. And that's what will eventually allow the Fed to be able to cut rates when we get to the point that unemployment has increased materially. But if you start to raise questions about Federal Reserve independence, you are raising the bar for the Federal Reserve to cut. If you actually did try to remove the Federal Reserve chairman, I think you would see a severe reaction in markets with yields higher, dollars lower, and equity selling off. I can't believe that that's what the administration is trying to achieve. Now, with respect to the question of what are we doing in terms of shadow Fed chair? I think it's not a great idea to have someone out there trying to second guess the Federal Reserve chairman, but it would be less dangerous if that person did not have a seat on the FOMC, and there are no vacancies right now.
Right. Okay, so let me ask you then a different question, which is, and this is kind of an interesting meta maybe idea here. We all think that Jay Powell is, quote unquote, independent today. But of course, whoever the next person is, you would hope is going to be independent too. But it's possible that you would see that next person as a puppet of the administration, maybe not independent. I don't know. Would the market have the same kind of reaction?
So I think it's really important that whoever takes over from Jay Powell should take over in good circumstances, in circumstances where that person looks that as he continues to have the independence that all Fed chairs have had in the modern era. That's going to set the next Fed chair, presumably someone who Trump wants to occupy that position. It's going to set that person up for success. But if it looks like that person is coming in without weakness, without independence, at the beck and call of the president, then you would set up the next Fed chair for failure. And I hope that on sober reflection, the administration will understand that, look, by all means, it's the president's right to nominate the next Federal Reserve chair in regular order. They should think about how trying to set that person up for success, so it also rebounds to the success of the administration as well.
Christian, I worry about trying to, anticipate the future for the Fed, because they notoriously have not really been good at doing it. Maybe it's just the nature of the beast, that it's almost impossible. You're always looking at the rearview mirror in backwards data. If he were to be wrong again, and if inflation isn't really the problem right now because of the tariffs, and we really are going into a slowdown for a lot of reasons, trade wars, everything else, and if we're late, and we should be cutting now, and everybody again says, uh-oh, looks like Trump was right, and Jay Powell didn't lower rate, it would be bad to go out on a mistake. So that's what I don't know if he'd be set up for success. It'd be almost like it should have gotten rid of him earlier. And all these guys are just, they can only be right for so long. I think a lot of times they should get out when the getting's good.
So look, I think it's always the case that the Federal Reserve is only making the best judgments that they can under extreme uncertainty, and it's going to make some mistakes. I think those mistakes are, of course, still more likely when you're being hit by very difficult shocks, and a big trade war is a big man-made shock. It pushes inflation up. It pushes growth down. So is it possible the Fed could make a mistake in this environment? Yes, it absolutely is. And the question that you have to ask yourself, the question I think markets have a lot of conviction on, is would you rather have an independent group of people, an independent group of experts trying to make those calls as best they can, or do you think those decisions would be better made under political pressure? That's the issue.
We've batted around a whole bunch of names over the years of potential Fed chairs, and one of the questions we were just discussing earlier is there somebody out there right now that you think is, quote unquote, famously dovish, meaning to the extent that you would want to nominate somebody who the market would see this way, who is that person?
So I'm not actually sure you'd want to nominate someone who is famously dovish. You would actually want to nominate somebody who has very strong hawkish credentials. And so the market would trust them, including to the point where they decided that it was appropriate to get cutting on interest rates. If you nominate someone who has a very dovish reputation, then the bond market would riot. So that's why I think there's interest, for instance, in looking at former Fed Governor Walsh, who does have a reputation as being hawkish. Again, I think the manner of the appointment would be crucial. Regular order.
So you think because he's known as being hawkish, that he will come back around?
That's a different question.
I think Krishna is trying to do the Jedi mind trick, though. You know?
Not who Trump, not who should be nominated, who Trump wants nominated. Trump,
but actually what he's saying is,
Walsh
would have the credibility because he looks hawkish,
these aren't the droids
but he's saying, in fact, he would be
Watch out
dovish.
for the bond market. Yeah.
Because the bond market would think but you think Trump is playing three-dimensional chess where he's thinking about how the bond market's going to react? No, don't tell you I've told you that. Don't say I've told you that. I don't know any more than you whether there's a method to the madness at this point. So you think that President Trump would think, wow, Walsh should be good for the bond market, I'll nominate him?
Again, I think the key thing here is it's strongly in the administration's interest to take a deep breath and let Fed Chair Powell run things for the remainder of his term. That's the best shot of keeping inflation expectations well anchored, keeping bond yields well behaved, and allowing the Fed to cut without causing real problems in markets. But when they look for a successor, they'll want someone who has hawkish credibility, but then has that credibility to cut in the way that they would be hoping.
Krishna is sending out his wish list to the administration. This is what the markets are hoping for. Please listen closely.
But it's also letting Jay Powell, he's making his own bed. If it does, if they are late, Trump can say, hey, I tried, and I let him stay and everything else. It's tough. It's tough.
Kristen, thank you. Great to see you.
All right, coming up, the government giving a thumbs up to a mega financial deal. Bring you details on the Capital One Discover combination. As we head to break, check out the shares of Apple, MoffettNathanson, cutting its price target from $184 to $141. MoffettNathanson, and it's at $194. Squawk Box will be right back.
Opportunities can be hard to find, like catching lightning in a bottle. In uncertain times, it's tempting to retreat or simply wait and see. At CME Group, we empower those who act. We deliver tools to help manage risk and capture opportunities in every market climate, across every major asset class, to seize each possibility at precisely the right moment. CME Group, opportunity is everywhere.
Access Middle East isn't just another finance show.
If you think about the UAE's trajectory, we actually think very, very long term.
It's a deep dive into the region's shifting power dynamics. What's different about Trump 2.0, particularly for the Middle East? Ambitious economic drive and the personalities pulling the strings.
Tariffs, trade wars, for whatever word you want to use. I think these are all challenging, not just for China, I think for the world.
Join me, Dan Murphy, for Access Middle East, your edge in Middle East markets.
I've always had an ambition to do something I loved. I actually got my degree in hotel and restaurant management, but I had a thing for numbers, and that's how I got onto Wall Street. I became a trader. I traded all different kinds of asset classes. The energy in a newsroom when there's a big news day out there feels a lot like the energy on a trading desk on Wall Street. There's a lot of activity. The stuff we do at CNBC means so much to so many people because it empowers you with knowledge and with everything that you need to make the right decisions.
Master the art of salary negotiation.
Everybody who walks into a salary negotiation is nervous.
Salary negotiations are really awkward.
The number one soft skill is flexibility,
preparation,
confidence.
Learn how to negotiate a higher salary with CNBC Make It's new online course.
I'm going to give you a roadmap for doing the hard work.
Because ultimately, if you don't fight for yourself, nobody else will.
Register right now at cnbcmakeit.com/salary.
Next on Unlocked, dramatic renovations.
I'm not sure we would have done the renovation in the beginning if we'd have known what it was going to take.
Three friends bought an abandoned high school and transformed it into this apartment building. A couple turns an absolute wreck into their dream home, then say goodbye to electric bills. A 117-year-old house gets a total recharge. Now it unlocks more energy than it consumes.
Getting rid of gas and moving to a completely electric building.
Next on Unlocked.
Welcome back, everybody. We've got some exciting news for you this morning. We want to take this opportunity to introduce you to our new subscription streaming product, CNBC Plus. Now, take a look at this. What you're seeing right now on your screen is our CNBC Plus data feed. It's got all these enhanced headlines on the sides, enhanced data along the bottom with it too. It all comes during our live business news coverage lineup. You can stream Squawk Box and any of your other favorite CNBC shows anywhere, anytime, and there's a lot of data on the screen, a lot of information. It's pretty cool.
And we can still see you fine, really.
But you got to talk if you want to see you.
And I'll tell you something.
Yeah, that's what I did.
I'll tell you something even cooler.
Tell me.
What?
You get the news while the commercials are on.
Yes, but you don't get
which is
right.
valuable.
There's a blank.
There's no. It's just what does it say? There's not. The commercials are running still.
Commercial. I don't even know if you get the full commercial or not. But
No,
I'm
it
saying
says
what you.
the programming is paused.
I'm saying
for
what you
commercial.
get though, which is great, is you still get all the headlines,
right.
the
It's
ticker,
still there.
and you get the ticker live.
They do that
throughout the whole day.
They
You
do
get
that
that on TV too, but you don't get all the headlines.
On golf coverage now.
Yeah.
It's like they call it playing through or something.
Oh wait, now we're at box within. Okay, I'm looking at our CNBC Stream Live, or the CNBC Plus Live, and it's a box within a box.
No, stay over there.
Rest.
Right.
Yeah. But it's pretty cool, and it's something that you can get for your phone, you can get for your TV. Just check it out on the CNBC app. It's part of it, or you can go to CNBC.com and check it out too for the subscription on it. All right, some corporate news from the long weekend. Capital One Financial's bid to acquire Discover Financial Services in a $35 billion all-stock deal, getting official approval by the Federal Reserve and the Office of the Comptroller of the Currency. In a joint statement, the company said that they expect to close that deal on May 18th, according to a release from last year. After the deal closes, Capital One shareholders will hold 60% of the combined company, with Discover shareholders owning the rest.
Tesla is delaying the launch of a U.S.-made, stripped-down version of its best-selling electric SUV, the Model Y. That's according to Reuters, which says U.S. production of the vehicle will commence at least a few months later than outlined in Tesla's public plan. Could come as late as early next year. Tesla investors have been hoping the company releases a more affordable car in order to boost sales. The company is scheduled to report first quarter results tomorrow.
Coming up, NVIDIA in focus once again as investors prepare for a new week on Wall Street. Shares of the chip giant down in the pre-market. There's a report that Huawei now may be stepping in to try to fill the gap that NVIDIA is leaving in China now that the Trump administration is restricting chip shipments. We'll talk about that and so much more. Do not go anywhere. You're watching Squawk Box on CNBC, and yes, on CNBC Plus if you go out and pick it up on your phone or your Apple TV.
CNBC. Live ambitiously.
One thing I've learned over the years is don't yell at the stock market. Why do we follow the markets? It's to make money and because it gives us a lens on how the world works. Ambition is the ability to see yourself in the future and to take steps right now in the present to become that future person. CNBC viewers are very ambitious. At CNBC, we are in the dreams business. You're watching to learn something.
Good money.
Everything seemed legit until it wasn't.
Good times.
The lavish lifestyle, the houses that they're used to.
Is never enough.
Someone who has a goofy social media presence could be laundering $4.5 billion worth of Bitcoin.
Fame, fortune, and fraud.
His stories were so good, they've all fell for them.
I believe in getting justice.
American Greed on CNBC.
So this is the best dish to me in Vietnam. Good childhood flavor.
Hi everyone, my name is Thủy Tin and welcome to Ho Chi Minh City. Lotto is the name of the game, just like bingo in America.
Vietnamese people drink coffee every day. If you drink the Vietnamese coffee, you can recognize the difference in the Vietnamese Robusta beans. It's a very strong, very resilient beans. Bitter. I think it's quite hard to the foreigner to imagine what they have in cơm tấm. You can find a lot of different kind of seafood here because we have a long poster. It's like the time when you visiting and socializing with your friends and family. 1, 2, 3, go! Join me during my downtime.
Squawk on the Street, CNBC.
All right, we're watching shares of NVIDIA this morning. A Reuters report says that Huawei is planning to begin mass shipments of its new AI chip to China as early as next month. That chip, which combines 2 processors into a single package, would provide an alternative to NVIDIA's H20 chip that now faces restrictions in China from the Trump administration. Joining us right now is an analyst who covers the industry closely. Matthew Bryson is Wedbush Securities semiconductor analyst. And Matt, what do you think of this latest news? We know it's already a big blow for NVIDIA to the tune of $5.5 billion in this next quarter that they're going to take the write-off. Is this a market that they're going to be frozen out of?
I think that's the concern, right? So demand from China was actually picking up. It sounded like they potentially were working to enable AI on smartphones, which would have been really interesting. And yes, if you push NVIDIA out of the H20 or the NVIDIA's H20 out of China and Huawei fills the void, then potentially NVIDIA loses that market.
What's the alternative scenario? Because this is something that the Biden administration was working on before the Trump administration. It's a bipartisan issue in Washington. No one wants to see this, and industry can push back and say that freezing America out isn't going to stop the progress there. But what's the alternative situation? I don't think this comes as a huge surprise, even though the timing may have caught people a little off guard.
Yeah, well, I mean, the alternative is to continue doing what we're doing, where the H20 was a less performant chip, well less performant than what NVIDIA is shipping to the rest of the world. But Chinese companies were still taking it because they liked NVIDIA software. And so you continue to give NVIDIA a foothold. And again, with the current administration, you don't know if this is a bargaining chip. So they come back and they offer China access to some NVIDIA technology as part of a trade deal or whether it's something permanent.
So what do you do with the stock in the meantime?
I think with or without China, that NVIDIA, in part because of their dominance with CUDA, they will be the dominant supplier of AI in 2025, 2026, 2027. And so I think it certainly hurts if they can't sell it to China. But at the same time, I also really believe in AI. And I think that NVIDIA is going to be the primary beneficiary on the hardware side of eventually AI getting used for everything.
What do you think about Taiwan Semiconductor? Because last week that company said that, no problems here, even with the tariffs, that they are going to be able to continue to meet the supply and expectations of the market at this point. This morning in Taiwan, the entire market was lower. It was led lower by Taiwan Semiconductor and concerns about that. Investors not necessarily buying into that entire picture. Do you?
Yeah, so I think you have the same problem that you do with NVIDIA, right? So AI has been driving Taiwan Semi over the last couple of years, or at least has been driving a significant portion of the additional growth they've been seeing. And so structurally, we have this question of if we have a more difficult economy, if spending gets cut back, then do you see AI suffer? Also, do you see things like Apple handsets suffer? And that weighs on TSM's near-term results. At the same time, we're seeing AI in particular drive demand for high-end semis, and Taiwan Semi dominates that space. And so I think next year, year after, again, they are going to be the leader, and they will sell lots of advanced chips. And so could there be a blip in growth? Certainly, if things get worse from a macro perspective, there could be, but I don't think it changes where Taiwan Semi is 2 years, 3 years from now.
Okay. Matt, thank you for your time this morning.
It is just past 7 a.m. right now on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan and Becky Quick. Got a lot of news for you this morning. Our top story, the Vatican announcing that Pope Francis died earlier this morning. He was a reformer from Argentina who rattled the Catholic Church's traditionalists. He championed the rights of immigrants and the poor. Pope Francis was 88 years old, and we're going to get a live report from the Vatican later this hour.
Among today's other top stories, shares of Netflix are higher as the markets digest the company's latest quarterly results, which were released Thursday after the closing bell. Earnings and revenue both beat estimates, and the company affirmed its full-year revenue outlook. This is the first time that Netflix did not disclose quarterly subscriber data as it shifts its strategy to focus on revenue and other financial metrics. And overnight, China warning that it will retaliate against countries that cooperate with the U.S. in ways that compromise Beijing's interests. That warning comes amid reports that President Trump is planning to use tariff negotiations to pressure U.S. partners to limit their dealings with China.
New results from the All-America Economic Survey on tariffs, just in time, I'd say, because just sports is quiet. We're in between a lot of things. I mean, it's the NBA playoffs, but
after the Masters, what is left?
After the good golf tournament, yesterday, Harbor.
What's the next one I should watch?
PGA.
When is that?
Quail Hollow, a couple of weeks.
Thanks.
In June, but we're going to do a little. Let's find out.
Right.
Find out what the athletes think about tariffs.
Right.
Do they know what tariffs are?
Just so people understand the 20-year, 22-year running joke. Well, we've been doing the survey for 17 years, but
these are not all Americans.
These are all Americans. This is
economists.
No. 1,000
Everybody
people.
in America.
Okay, so it's all America.
It's all. Can you get a picture of Joe understanding the revelation, please?
It's all.
Look at that. It's all Americans. A plurality of Americans think across the board tariffs are a bad idea, with most believing they will hurt jobs and be worse for inflation. And the public's having a hard time believing there's payoff at the end of the process. 49% of respondents to the CNBC All-America Economic Survey say across-the-board tariffs are a bad idea. You can see that with 45% feeling pretty strongly about it, 35% support them, 15% undecided. So there is some opening for the president to convince Americans. The most negative on tariffs were Democrats, black Americans, young people 18 to 34, and urban dwellers. Most positive, the GOP, rural Americans, income greater than $100,000, and men 50 plus. Majorities think tariffs hurt importers, the cost of everyday goods, the overall economy, and workers. But by 51 to 37, Americans think they help companies producing in the U.S. The public also has not embraced the president's concern about our allies representing an economic threat to the country. Mexico, Japan, Canada, the EU, and the UK, all overwhelmingly seen by the public as more of an economic opportunity than an economic threat. Only China seen by more Americans as a threat, but by a modest 44 to 35% margin. Remains to be seen whether it matters if the president is out of step with the broad public on tariffs and trade. The president's base backs him on tariffs by about 20 points less than otherwise. Their support is, as you said, 20 points below his overall support. Democrats overwhelmingly disapprove, guys, and independents don't like tariffs by a 2-to-1 margin.
Does this surprise you? Some of this is surprising.
Well, I don't know. I mean, I think sort of tariffs are a bad idea, so it wasn't weird for me to see that. It was interesting to see. Look, his base is not abandoning him on the tariff issue. When we ask, do you think his policies will have an effect over time, Republicans are likely to say yes. It'll take a year or longer. So Republicans are giving him time. Democrats and independents not. What surprised me about the poll overall was that Democrats and independents looked like they were willing to give the president a shot in December the way Americans always do. They always do a little bit of rallying behind. But the numbers, and it was our Republican pollster who was like, I didn't think the Democratic numbers could get any worse. They're like 90% against, and they brought a lot of independents with them.
Is it 100 days today? I mean,
is today 100 days?
I don't know. I think it's in a week.
It's
in a week from now.
I think there are things the president is doing that can be done in a way that has broader public support.
So did you see this?
Is that is that a crazy idea?
No.
Did you see this?
No. What is that?
Cover of New York Magazine.
What does it say?
And it says it's a picture of all these guys on Wall Street with MAGA hats on the floor, with their hair on fire. Basically, everybody's hair on fire. And it says, I did not think for 1 second he was going to go this crazy. Meaning all of the Wall Street guys on the tariff issue. That's basically what the article is. It's fascinating.
Well, I think it's kind of almost pedestrian. Yeah. Duh.
At this point. I mean, and now I don't know what to think about this Fed thing, which...
Nightmare on Wall Street. That's the...
Yeah. Right.
That's the story.
Remember the bidding on the Fed thing? The president said, I can't wait till he's terminated. We talked about that Thursday. And then Megan Casella reported she was told by a White House official that they weren't considering removing him. And then Hassett, over the weekend, you guys saw that, right?
Terminated or term ended?
Huh?
Did he say terminated or term ended?
No, he said terminated. The president said terminated.
Right.
And then Hassett, who is a guy you got to take seriously, right?
Yeah.
Says, we're thinking about this.
Oh.
Now, I was able to confirm over the weekend that, among others, Kevin Warsh was trying to dissuade the president from this. I thought that was reasonably good news, and I think...
I think that he can now say, I warned him that he should have cut rates in case things do slow down.
It's just
he leaves him in. He made his bed. I tried. Jay Powell. I can't imagine that they're really...
I don't think the Fed is beyond persuasion.
Right.
I think if
Powell might say,
okay, Mr. President, show me your numbers.
Right.
What do you got? How do you make a call here that I don't have to worry about inflation, that I should just address the other side?
It's hard to look forward instead of backward. That's the Fed's problem.
Well, is it really its problem?
Yeah.
I mean,
well, it was back when it didn't think inflation...
When are you talking about?
When we were transitory, and it wasn't transitory.
Which was the middle of a pandemic.
I know.
Right?
I know, but have you ever seen a perfect... It just seems like a lot of
times...
time...
They were about to stick a landing.
But
they were about to stick a soft landing.
By definition, it's hard for the Fed to react to anything other than backward-looking data.
An independent Fed is a big difference. If you look at countries that have them, countries that don't.
I'm just saying that it's hard. I'm not saying anything about independent. I'm just saying it's hard to look forward versus looking backward.
I don't want to create more worry than it's worth.
Predicting the future
but we
is
are
hard.
weaker this morning.
Predictions are hard, especially about the future.
We're weaker this morning on the dollar against the euro, against the yen.
And the dollar's been down 4 weeks in a row. It's for the year. I think it's
you said 7.5% earlier.
7.5%, right?
And as you said, it starts to add up
for the 1 year.
And by the way, it's going the opposite way of what the theory would tell us would happen when you put tariffs on. So it adds to and exacerbates the inflationary impulse from the tariffs. Right. It was the idea. I had done a story a couple months ago. Oh, the tariffs, we have the dollar strengthening, so maybe it won't be so bad.
Yeah, a weaker dollar exasperates the pain that Americans feel when they're trying to buy goods. Exacerbates.
Yeah.
There's one more piece of this we're going to come back to.
Okay, good. For a rule of thumb for you, so the PGA is not June, it's May. So there's 4 majors, one in April, May, June, and July.
They moved the Masters.
They moved the
PGA.
Year. They moved the PGA.
Right.
It used to be the last tournament.
Now it's May. I have a whole bunch of ideas to how to produce it better.
Okay, now it's May. I thought it was pretty good this year. Now it's May, and then the U.S. Open. U.S. Opens in May 15th. U.S. Open June 12th.
Getting you started on golf. They don't want me to do that. Yep. In the back, they asked me to keep you.
I heard from someone that I want to. I heard from someone that I want to please. About this. Yes.
Well, I know who you're talking about.
Yeah,
okay, very good.
All right, so you can tell the people.
My wife told me I could golf or fish.
They can shove it. And who was it in the back that told you?
No. Just in general. They say keep Joe away from golf. That's what they say. Among other things. Keep Joe away from other things.
Okay. Do you have names?
I don't have names.
Are you keeping a list McCarthy style?
I'm hearing from the supervising producer that it wasn't him.
It wasn't him.
And his voice was like 3 octaves
Everybody
high.
will deny it.
Thanks, Steve.
We'll
see you in Quail Hollow, PGA.
Thank you.
You know, Ryder Cup is the
Keep Joe away from golf.
We'll see you. We will see you in the 8 o'clock hour for an interview with Chicago Fed President Austin Goolsbee, which should be interesting. Goolsbee I don't know. Is he dovish? Is he dovish? You told me he long-term dovish.
My earliest ambition was to be a teacher, but I felt I couldn't afford it. My mother thought it was the highest calling, and I gave her a promise that one day I would be a teacher if I did well enough in life. It was my ambition, and I was able to achieve it. So now I can teach you so that you can be as ambitious as you want about whatever you want to do. CNBC is my home. If you love your work, well, maybe it's life itself.
So this is the best dish to me in Vietnam. So good. Childhood flavor.
Hi everyone, my name is Thủy Tiên and welcome to Ho Chi Minh City. Lotto is the name of the game, just like bingo in America.
Vietnamese people drink coffee every day. If you drink the Vietnamese coffee, you can recognize the difference in the Vietnamese Robusta beans. It's a very strong, very resilient beans. Bitter. I think it's quite hard to the foreigners to imagine what they have in Cơm Tấm. You can find a lot of different kind of seafood here because we have a long coaster. It's like the time when you visiting and socializing with your friends and family. 1, 2, 3, go! Join me during my downtime.
Kelly Evans, The Exchange, CNBC.
Futures have improved a little. We were down 350. We're now down 286. On NASDAQ, less than 200. Well, never mind. And the S&P down just under 50. Joining us now, Evan Brown, UBS Asset Management, head of multi-asset strategy. I said off camera that a lot of the things that you're positing here are similar to what Tom Lee just said. Maybe you didn't see him, but maybe we've seen peak volatility, but uncertainty still reigns supreme at this point.
Yeah, I think the days of big spikes to 60 and 5% daily moves are probably behind us after Liberation Day, and I think we're now in a de-escalation mode when it comes to the tariffs and such.
That's the part that I thought was very interesting. You think that de-escalation, even with China, you say the Trump administration appears to recognize tariffs are unsustainable, and he's paying attention. He's more sensitive to the state of the bond market. So you think he hears this stuff? He hears the murmurs.
He hears. I mean, this is what he said when he backed down on Liberation Day. Is he said the bond market was getting a little bit jittery, and then it was a beautiful bond market after he changed policy. I think. We've talked about what the put is for the administration, and it's not on the S&P. I think it is on the bond market. They are conscious that they want to lower the cost of living on Americans, and they know politically that if you have mortgage rates start spiking even above where they are, if we're getting to 7.5, 8%, because the long bond is moving, that is a big problem politically with them across the spectrum.
So, I mean, that would be the weirdest method to the, and we talked about method to the man. I'm glad Shakespeare lived because we use a lot of his expressions. But if he were to slow the economy, which causes rates to come down and inflation to be lower than anticipated, and then back off on the tariffs, is that an even trade to have a suboptimal GDP number or even a recession to affect those other goals? Is that what he's doing?
It's a good question. I mean, if you want to get, before we had all the tariffs coming in, we did have bond yields coming in lower, just on the idea
below
that
4% at one.
Yeah, on the idea that organically the U.S. was going to be cooling down. You had DOGE, you had government job cuts, you had immigration slowing down, and so they were getting there. The challenge is that with the tariffs, which have increased inflation risk, as well as, on some level alienating some of the major foreign buyers of long-term treasury bonds, that's created an issue for him, and I think that's one that the administration is and has to be sensitive to going forward.
You think that Jay Powell finally cuts rates sooner than people thought or more than people thought? Is he going to have to?
He will have to cut rates, but I think he has to be hawkish before he gets dovish. I think he needs to show we're on top of inflation expectations. We're going to be over the coming months annualizing inflation, above 3, potentially above 4% because of the tariffs. And so, it's hard as a Fed chair to say, hey, we're cutting rates, and by the way, we have 4% inflation right now, double the target. So they will, even amidst that inflation, cut rates only when they start to see real weakness in the real economy, and we have not seen that yet.
What about?
You really think that that's the choice they'll make? If that inflation is not going to be the primary focus, that in the end it's the jobs market that wins out?
I do. In the end, yeah, because the traditional way that the academic way of looking at these things is the tariffs are a negative supply shock, so they boost inflation, they reduce growth, but that inflation hike is a one-off. It's a temporary rise in the price level, as long as inflation expectations don't get out of control. And so if they've managed inflation expectations by sounding hawkish at first, and then they've managed that, and then they see the growth weakness, then they can go ahead and cut rates.
So this actually is good news for Kevin Warsh.
Yeah.
Because you'd want to look like you're hawkish and then be dovish.
That's right.
If you're suggesting that's what he's going to be.
Yeah, look, I mean, I think the worst case scenario is the Fed, if the economy just looks okay, looks resilient, and then inflation, spikes to 4% or so, and then the Fed's cutting rates in that scenario. That is a very bad situation. That's where you get those kind of medium-term stagflationary concerns a la the 70s, where the big problem there was inflation expectations really just getting out of control. And you want that, you need that to get contained.
Earnings have been okay, but the outlook's murky, I guess. And I don't want to put words in your mouth, but we're out of time. So just say yes.
Yes, Q1 earnings solid, but obviously very murky going forward.
Okay. Evan, thanks. All right, Evan Brown, UBS. Take care of my money. Would you?
I will do my best.
I got some over there. It goes all the way back to, what's it go back to? Kidder Peabody, I think.
That was before my time with GE.
Yeah, Jack Welch, Kidder Peabody, turned into UBS. You? No.
I don't think so.
No?
No. I just keep it under my mattress.
But I think it's cool. I have like a Swiss bank account. You know what I mean?
You have to write that off every time anybody asks on taxes, right?
Yeah.
Thanks for coming in, Evan.
Thank you.
When we come back, we've got a live report from the Vatican as tributes pour in from world leaders following the death of Pope Francis. Squawk Box, we'll be right back.
Live from the New York Stock Exchange, Halftime Report, CNBC. Want to make some extra money, but not sure where to start? CNBC Make It will teach you the skills to earn passive income online. Take our new online course that will help jumpstart your business idea. Get expert advice and hear real-life success stories.
Soon, you'll have the tools that you need to start your own passive income business.
Learn how to start generating additional income right now. Register at cnbcmakeit.com/passive income today.
I was studying molecular biology, going to grad school. I started investing a little money for my dad, and I got bitten by the bug. I was a stockbroker, and it's fun, but we all wished we could just follow the markets and talk. My ambition was to be able to pay my bills and not have to constantly be selling. In today's world, I would urge a lot of people to get financially savvy. Squawk Box and CNBC, it is my home. It's the greatest job in the world.
I'm going to show you the way Vietnamese people enjoy coffee in the morning. I live here and I have to say that I love the traffic here, which seems like chaos to foreigners, but it's actually an organized